Over the course of 2008, FSG worked with the Bill and Melinda Gates Foundation's Financial Services for the Poor group to develop a new 5-year strategy for microfinance. Because the field of microfinance is so crowded, the challenge was to develop a strategy that would allow the Gates Foundation to make a unique and measurable contribution. When FSG supports the development of a strategy for a foundation, we typically follow 3 steps. First, we understand what the values and capabilities of our client are. In this case, our client was driven by the belief that every life has equal value. This told us that the strategy we developed together needed to benefit all segments of the poor. It's also important to know that the Gates Foundation has a broad toolkit of resources available to contribute to its philanthropic efforts. This toolkit, of course, includes the ability to make really large grants, but it also includes the power of the co-chair's voice and the wherewithal to convene and connect actors across the private, corporate, and government sectors. This meant that the team could think outside the box and beyond the grant when we developed ideas for how they would actually execute on the new strategy. After we learned about our clients' values and capabilities, we switched gears a little bit and we conducted the prongs of our external research. First, we started with a comprehensive scan of what other funders that are active in microfinance were doing, were investing in, were spending their efforts on. From this, we learned 2 really important things. First, there's about $2 to $3 billion that flow into microfinance each year from foundations, from bilateral and multilateral development agencies, from social and commercial investors, etc. Well, of that money, less than 5% is actually philanthropic capital. Second of all, most of that money, most of that effort, that activity is actually focused just on microcredit. So what did that mean for us? Well, it meant, first of all, that even the Gates Foundation would probably only be a pretty small player in the space. So their efforts needed to be highly leveraged. It also meant that microcredit may not actually be the best place to have a really unique impact. Finally, we conducted interviews with a whole bunch of experts, did a lot of literature review so that we could understand the needs in the microfinance space. This research confirmed what we already knew, which was that the microcredit movement had been incredibly successful. It paved the way for the poor to be viewed as bankable. It also resulted in the development of innovative ways to deliver financial services to the poor at ways that both the poor and the providers could afford to engage in those products. But it also turned out that the poor need something much more basic than a micro loan. They need a safe place to store their money. 90% of the world's poor don't have access to a basic bank account. What does that mean for them? Well, it means they put their money in a mattress where lice eat it. They may buy a necklace or something else to store the value of their cash, but that gets stolen. They may buy livestock, but sometimes the livestock perishes. They may even pay somebody to store their money for them in the village, but sometimes those money holders disappear. All in all, when you think about all the informal ways the poor were storing their money, they were dangerous and they were expensive, and the poor don't have much money to begin with. We also looked at the barriers. What would it take to provide savings accounts to the poor at scale? Well, it turns out in order to do that, you need private sector action, you need technological innovation, and you need policy level change. So you need somebody to be able to orchestrate all of that. You put all that together and you think about the fact that savings is universally needed, right? Everyone needs a savings account. It's been underemphasized by the global funding community because they've mostly been focused on microcredit. And the Gates Foundation could not just contribute cash, but they could actually deliver this concerted action at the policy level, the technology level, they get the private sector involved. It became pretty natural that safe places to save would be the anchor of their new strategy. The co-chairs formally adopted this new strategy in mid-2008, and since then they've been busy implementing and helping to create savings at scale around the world.